Raamdeo, what do real asset managers like Ankur and Brookfield and others need to do to really, tell the story more? Is that what is?
No, one of the things is that the public facing, we have 4 REITs, what you said, $11–12 billion. They, today, I think the yield offered is about 6–6.5%. And then on top of it, you have this resets of 3–4% or 5%. So that in all, it gives you about 11–12% pre-tax, which gives you about 9–10% post-tax. So that's what is available in public at large. But for the very large institutional investors, probably they might be able to become your prop investors at, say, GIC or all these people. They must be participating in your own balance sheet developmental role. So they might be getting that 18%. I don't think the public at large have access to 18% return.
Yeah, so it's a fantastic point, and it's a criticism that I would take, that we haven't had the longevity in the REIT space, REITs or InvIT space in the country to be able to demonstrate track record over a cycle. I'll give a data point. We invested in a large commercial portfolio in Mumbai, Powai. Annual rent resets 3–4–5% that you get. The underlying propensity or the earnings power of the same portfolio has increased 3x since we made our investment 9 years ago, which means you've gotten 8% yield and your capital values have increased by 3x over 9 years, which is, you make your math, 30% IRR. So you add the two, you're making 38% IRR in your business. And that is available to the REIT investors. It's just been 4 years that they've been invested in the REITs. They have to see a cycle play out, rents getting reset, next guys coming in, and so on and so forth. So these returns won't be made overnight. This is the real economy. But the good part is you're getting paid dividends while your underlying businesses are getting more valuable. And at various points in that cycle, you will see either capital appreciation that will lead to income resets, which won't be 3–4%. If India continues to grow at 6–7% real, which is double-digit nominal, we can make our assessment as to what Mumbai and Bangalore will grow at, or Delhi and Gurgaon will grow at. And I would again reiterate the point that this will be very high returns.
Would you say that since there is a 18–20% capital appreciation, which will translate into higher yield as go for resets and change of the tenants or things like that? So are you saying that your REITs potentially on a 10-year basis can yield to me, if I buy today at 6.5% yield, upwards of 15–17%?
As we always have disclaimers, but I will be disappointed as an investor. And we are the largest investor into our REIT as Brookfield. So I will be very disappointed if our investment vehicles like our REITs and our funds don't do more than that, Raamdeo.
What was that number? 15%?
Yeah, I said that's what equity gives.
Correct.
So if it can beat with a collateral and kind of a downside protection, if it can give me 15%, clearly there could be a good arbitrage between equity markets and this. But what I understand is that it's a good mezzanine kind of stuff between the fixed income, that bank deposits, which is upwards of 200 lakh crores a year, and equity. So that's what I was thinking, but at 15–17%, it can actually challenge the equity market itself.
And we are the challengers.
But, why